Hey, what's going on, bull runners? Welcome back to the channel. Billions of dollars in institutional money are waiting on the sidelines, ready to flood in, but something's holding it back. What's the catch? Regulatory uncertainty, lawsuits, and potential fire sales of assets that could crash prices or spark a rally. The clock is ticking, and the next few days could change everything. In today's video, we're diving into several game-changing stories. The Ripple versus SEC lawsuit that's nearing its end, the SEC's new stance on liquid staking token that's a massive win for DeFi and institutions, and hold on to your wallet, BlackRock's rumored to move over 100,000 Ethereum tokens. These aren't just headlines, they're signals of where the market's headed. So stick with me as we unpack why these matter and how they could affect your portfolio. Plus, we will be heading over to X to find out all the breaking news in the financial world today. We'll head over to Forex Factory and check out the red folder news that you need to know about and go over the numbers for services PMI with you that came out today. We're also going to be diving deeper into this SEC guidance on liquid staking tokens. And if you've been following along for any time now, you'll know that we have created Altcoin Pro University where we go over all of the strategies for DeFi. You can go ahead and click the link down in the description if you want to find out more. But we know this is a big, massive way for the future while you're holding onto your tokens, still making money. One of the main topics in our community tab is the DeFi yield picks, which we come out with new picks every single week to help you earn yield on your crypto. Now, some of you may not even know what is yield, what is liquid staking, and that's why we're going to dive into that a little deeper for you today. Plus, we will be heading over to TradingView and checking out XRP in the charts. We are going to be looking for our most important upcoming resistance and support levels that you need to know about. Plus, we'll be covering our long-term and short-term momentum waves and so much more in today's video. So if you're like most people where you don't have the opportunity to spend hours a day in the crypto news like we do for you, make sure you subscribe right now. And if you are still feeling bullish about this current bull run, let me know by commenting 777 down below. First things first, let's head over to CoinMarketCap, check out the overall health of the crypto market today. We are trading at $3.71 trillion total market cap. It is down 1.65%. In the last 24 hours, we have had $146 billion worth of trading volume. Fear and Greed Index sitting in that middle spot at 52 out of 100. Altcoin Season Index sitting at 42 out of 100, getting closer to that altcoin season. Bitcoin dominance taking a tick to the upside, 61.1%. We were getting closer to that 59%. Bitcoin ETF tracker, another bad day to the downside, outflows of $322 million. That is over $1 billion worth of outflows for the Bitcoin ETFs in the last two ETF trading days. Ethereum having an even worse day of outflows. We can see here $465 million worth of outflows. So quick question for you all, answer in the comment section. Why are we seeing this massive sell-off in the Bitcoin ETFs and Ethereum ETFs? What does that mean is happening right now? Yes, that is correct. You are a genius. They are taking profits right now. And that's one thing that you have to get used to in the crypto markets is when prices go up, you do actually have to take profits from time to time. Otherwise, if you've been in crypto long enough, you're going to end up round tripping your crypto bags. Top 6 cryptos by total market cap. Bitcoin number 1 at $113,789. Ethereum number 2 at $3,573. XRP at number 3 at $2.93. Tether at number 4 at 99 cents. Dollar. BNB at number 5, $751. Solana at number 6, $162. So this morning, the news did come out. Forecasted services PMI of 51.5 came out at 50.1, which is actually positive because it's above the 50 level. Barely, but because it didn't beat its forecast, it does show us in red. The services PMI is a leading indicator for economic health. What they do is they survey 300 purchasing managers of major corporations, and this is going to include people that are non-manufacturing. For this report, above 50 indicates industry expansion, below indicates contraction. So we are expanding as an economy, but barely. No major news coming out tomorrow. What we are waiting for is Thursday. Massive unemployment numbers coming out. All right, heading over to X, let's go ahead and jump right into this Ripple versus SEC XRP lawsuit updates. Fabio did an amazing job on this post. I read this thread earlier, and I definitely had to share it with you guys. Ripple versus SEC nears the final chapter, but one key decision remains. After nearly 4 years of litigation, Ripple's historic courtroom battle with the SEC is approaching its conclusion. Ripple has already taken major steps to finalize the case, but the lawsuit technically remains open, and the next move belongs entirely to the SEC, which we've been covering now for quite some time because remember, Ripple has already agreed to drop their appeal, but the SEC is still holding on to theirs. And as far as Ripple filling its obligations, on June 27th, Ripple made two decisive moves. One, it withdrew its appeal of the court's earlier ruling on institutional XRP sales, and it also deposited the full $125 million civil penalty into escrow. These actions confirm Ripple's commitment to turning the page. And if you remember, there was a lot of talk about Ripple may be able to pay with XRP holdings, right? So some of the escrow money, they could just send that over and pay the SEC with XRP, and then those XRP monies would be going into the crypto strategic reserve, or now AKA the crypto stockpile. But now we know that that is not going to happen. However, Ripple cannot unilaterally close the case. US court procedures require both parties to jointly file closing documents, and the SEC has yet to submit its own withdrawal. The legal ball is now firmly in the regulator's court. And what's really interesting is the SEC and the Ripple case is really the only one that remains because the SEC went on a closing spree and closed out every other case possible. But because Ripple and SEC were tied up in these appeals against each other, we are still sitting in this purgatory of waiting for it to clear out. Now, we also have to consider the judge running the case. So Judge Annalisa Torres is likely proceeding with caution. Legal experts suggest that Annalisa Torres is taking her time deliberately. The significance of this case, one of the most consequential crypto enforcement actions in US history, by far. If not, it is the most inconsequential for sure, which means that every detail is likely under intense review, and any ruling that she affirms could carry lasting implications for how digital assets and crypto firms are regulated in the United States going forward forever. So her careful approach signals how seriously the judiciary is treating this precedent-setting case. So going forward, what do we have to look forward to? Well, on August 15th, a potential inflection point is happening. The next official milestone, which is August 15th, when both Ripple and the SEC are expected to file joint status update with the court. While not a legally binding deadline, the date holds weight as a litmus test for how soon closure may come. The SEC has three possible paths here to close this out: withdraw its appeal and end the case, like Ripple has already done, or request more time citing procedural reasons, or continue delaying, which could further damage its credibility and public perception. And when I show you this tweet from Paul Atkins, he wants to close out every case. He wants the SEC to go back to having a strong reputation. I'll show you this in a couple of minutes. If the SEC formally withdraws its appeal, the ripple effects would be substantial. Pun intended, obviously. Ripple would regain full freedom to resume its institutional XRP operations without legal overhang. The $125 million fine in escrow would be released to the U.S. Treasury. And additionally, over 1,700 confidential Ripple contracts, many sealed during litigation, could become public record. Most critically, the court's decision would be decimated and precedent, potentially reshaping the regulatory landscape for crypto firms across the entire country. But unless and until the SEC takes its final step, the case remains technically unresolved. And as I mentioned, Paul Atkins wants to get the SEC back on track. And he says here, today's staff statement on liquid staking is a significant step towards clarifying the staff's view about crypto asset activities to do not fall within the SEC's jurisdiction. I am pleased that the SEC's Project Crypto initiative is already producing results for the American people. So is the Ripple case also part of his Project Crypto? Because remember, he's been talking about this Project Crypto. He started announcing it last week and it's been going forward this week. But we do know that the Ripple SEC case is still being held up.
Have you built a crypto portfolio over $1 million but want to access your wealth without selling any of your coins? Well, imagine unlocking up to 85% of your portfolio's value to fund ventures like real estate, to buy other projects in the crypto space that are undervalued compared to the projects that you currently hold, or to diversify into different DeFi yield opportunities. That way you can live on the interest without selling any of your crypto. Well, We've partnered with a leading global office offering non-recourse crypto loans for investors with portfolios starting at $1 million. The same company that is trusted by the world's largest institutions and investors because, as you already know, the billionaires don't sell their crypto, they borrow against it. So if you're ready to unlock up to 85% of your portfolio's value without selling any of your coins and you have a portfolio with at least $1 million, then email us at team@bullrunners.com. You're going to see our email contact in the description below, and we'll get you connected with the company that has helped clients like ours north of $100 million borrow against their crypto without selling any of it. So reach out to start a conversation with our team right now at team@bullrunners.com, and we'll talk to you soon.
But the big news that did come out today was the SEC declaring crypto liquid staking activities are not considered securities. And that's where this article comes into play. We'll jump back to X here in a couple of minutes, but this is a huge win for DeFi institutional investors. The SEC has now clarified liquid staking tokens like those used in Ethereum, Solana, or Binance's ecosystem aren't always securities. And this came after pressure from heavyweights like Van Eck, Jito, and it's a game changer. So here's the deal. Liquid staking lets you stake your crypto to secure the blockchain and earn rewards, getting a token that you can trade or use in the DeFi. The problem is the SEC used to argue that the tokens from rewards might be securities, which scared off institutions and limited DeFi growth. Now with these new guidances, billions in crypto can flow into staking and DeFi without legal headaches. People all over X are saying this is going to unlock billions for trading and innovation. Mara Schmidt, CEO of blockchain developer company Alluvial, says institutions can now confidently integrate liquid staking into their product, which is sure to drive new revenue streams, expand customer bases, and enable creation of secondary markets for staked assets. And the reason this is important, it's a green light for institutions to dive into DeFi. So platforms like Lido and Rocket Pool could see massive adoption, boosting tokens like Ethereum, Solana, and it also signals the SEC under the new leadership is shifting to crypto-friendly stance, especially since President Trump's pro-crypto policies took effect in 2025. This could pave the way for more DeFi projects to thrive, driving up tokens prices and liquidity. Now, a lot of people don't even know that you can earn money with DeFi, and that's one of the main things that we teach over at Altcoin Pro, and you can get the link down below. But like, take a look at this, for example, a weekly DeFi yield pick that's going on right now. Coinbase's Bitcoin, so wrapped Bitcoin via Coinbase, and USDC. Those are pretty stable and trustworthy tokens to think about doing a DeFi yield on. So the network that this will be done on is Base. The protocol is Aerodrome and VFAT. And the yield, take a look at this. How about earning 60% APR depending on your range? Or maybe you don't hang out on the Base network. Totally fine. We have a SUI network opportunity here as well. And that one's earning 16% APR. Heading back over to X, we also have Tom Lee coming out talking about MicroStrategy shares and how important what Michael Saylor is doing to the crypto industry really is.
Michael Saylor is changing the reality of the stock market. And the reason is that he probably will end up being the largest, potentially the largest company in the stock market, okay? Especially if Bitcoin goes to $1 million. Yet he doesn't generate GAAP net income to justify it. He's based solely on the value of his balance sheet. And but that's not new to history, because when I graduated college, the biggest stock in the S&P, a top 5 name was ExxonMobil. And it was top 5 for 28 years, 30 years, like an entire generation. Graduated, worked on Wall Street. A top 5 name was a company that was only valued on the value of its oil, not on its net income. So like MicroStrategy is like replacing Exxon in lore, because, you know, for a whole generation, people said Exxon was the biggest company, but you don't value it on earnings. Well, MicroStrategy could be one of the biggest companies in the world, and it's valued on its Bitcoin.
Wow.
Speaking of Bitcoin, we have over $18 million worth of Bitcoin shorts that are at risk when Bitcoin reaches $125,000. So as you can see here, there is a significant amount of short sellers to the upside that can be liquidated once we have a nice pump to the upside. Also, breaking, BlackRock is about to sell 101,975 Ethereum, or $372 million. that taking profit, as we talked about, and 2,544 Bitcoin, we can see that they have transferred these coins to be prepared to make a sale. I like this post from Nick here. He said, "We need retail back in the game, real retail, not corporates, not funds or normies. Alt season won't be sustained without them. Sorry, that's just how it works. Wake up, retail, seriously." And we've been talking about this. Retail is here. There's a different style of retail here now, and it's the ETFs. The problem with ETF retail traders is that the companies that they're buying those ETFs for the clients, it's designed to make money. So as soon as they have a certain period of time that they feel like they've made a gain of 5%, 10%, 20%, whatever that is, they're going to be taking the profits. And that does hurt the volatility of Bitcoin back to the downside, creating dips. Because right now we don't have retail buyers, which is also good for us, letting us know that euphoria is not here yet. Because remember, when euphoria, the FOMO kicks in and actual retail, as he's pointing out, starts to buy up all of these coins that these major institutions are holding to sell to the retail, right? These are the dummies that are not here yet. That's why the corporations are buying and buying and buying. They will eventually sell it to these people and exit for the next cycle. Another interesting point, a former hacker turned CEO warns quantum and AI could break Bitcoin's cryptography. And we talked about this yesterday. Elon Musk is also worried about it. It says his AI says it could happen by the 2030s. So that would be 5 to 10 years from now. And attackers may already be stockpiling encrypted data. And I'm sure, as many of you know, White House is preparing executive order to fine banks that discriminate against crypto companies and conservatives. So crypto is going to be free reign. You can do whatever you want with the banks again. Now, obviously, the banks are going to let it happen, but they're also probably still going to secretly be trapping you until the wave finally knocks down all of the competitive mind thoughts, the competitive negativity against crypto in the banking industry gets wiped out. All right, jumping into the charts for XRP. Quick update for you guys. As we talked about yesterday, unfortunately, price did get up to our spider line here at $3.10, rejected directly off of that. Now, what's interesting, that spider line comes to us from 2018. So what we do is we take the weekly charts, the top of the candle from the drop of 2018, and you put a pivot point in the middle of the high of 2021 using the ray tool from the TradingView tools, and then you shoot a ray into the future. And from the current status of where we're at, we take a look. We just rejected off of this one here, which was the February 19th, 2018 weekly candle. And now we're going towards the green one, which was the February 5th, 2018. So let's go into the future. And as we see right here, here is the yellow one that we just bounced off of yesterday. And we are heading back down to the green one here. So the green one does come in at $2.89. We have a nice support there. So right now we are just trading in the range between $3.10 and $2.90. If we do lose this range, there's a possibility we continue our drop back to the 50 exponential moving average, which is 280. Very positive, because the next thing is something we don't want to see happen, and that would be price losing these moving averages on the daily and returning back to the $2.55 level to the downside. There's a couple of things that could be both bearish and bullish, depending on literally the next couple of days on the market. So first and foremost, our daily long-term momentum wave has been in the green. It's been bullish for quite some time now. Our short-term momentum waves were bullish along with it. And then the short-term momentum wave turned itself to the downside. So did price action. Then our midterm momentum wave also turned to the downside. These are called the shaft trend cycles. You can use them. I'm using the 10 and 30 and also the 30-50 as far as my times. So what could be bullish about this scenario? Well, a couple of things. One, we have reset back to zero. So it's time for it to make its reset back to 100. And last time we saw this on the charts, it was reset at zero, and then it made its reset back up to 100 and stayed at 100 for quite some time, and we boosted all the way up to new all-time highs. Now, the bearish thing we are looking at is the fact that this could lay flat and zero out. We can see our daily long-term momentum wave is getting closer and closer to the zero line here on a reset. So let's switch to the 12-hour. As you can see here, 12-hour broke below the zero line here and it's been running bearish. Short-term momentum wave did turn up. Unfortunately, price action over the last 3 12-hour candles has been bearish. And so we did not get that turn up that we were hoping to get on the midterm momentum wave, which is the white one. So right now we have bearish long-term, bearish midterm, and the short term is doing a reset. But the problem is it's also starting to have price action to the downside. If we lose this 289, price action continues down, and then we have this negative reset on the 12 hours back to zero again. Well, look out down below, and 255 is a reality. Now, what else is positive, though, that we've been talking about? Well, we're going to talk about the moon phases, right? So last time we had a moon phase, a full moon happen, we had a significant rise in price. Then we had a new moon happen, and we've had a significant dip in price. Well, the great news is we do have a full moon coming on August 9th. So it is just a couple of days away. We have 4 days. So if we can just stay and consolidate here instead of breaking to the downside, that would be fantastic.